We were the first public Bitcoin miner in the world. And so, we don't love that model. It's a very capital intensive model. We think this is an asset light model where your assets are productive versus non-productive. They're not depreciating, they're appreciating. Yeah, as I mentioned before, we've recently announced that we plan to raise $100 million to buy additional ETH. That would fuel our staking operations. We could vertically integrate with our block building and run validators through Rocket Pool. So unlike some of the other treasury strategies that are just simply taking the ETH and giving it to a third-party custodian to stake for them and paying fees, we're actually doing that work ourselves. So I think we have the ability to, as we raise more money, to really ramp up revenue and ETH per share.
Sharplink Gaming is doing Bitmine, et cetera. They're using some different approaches than what you're proposing. Explain that a little bit further.
Well, I think we're very different. I mean, one, in both of those companies, you have high-profile chairmen, but they're not actually at the company as a CEO, right? So I sit on the board of another company, and I sit on 4 meetings a year. So it's TBD how involved they'll be on a day-to-day basis. Those models are pretty much buy Ethereum, have an investment manager deploy it and stake it via a qualified custodian, whether that's Figment, Blockdaemon, one of the big players, Kiln, et cetera. We actually run our own nodes, so we're in there doing the tech. We're block building. We're, I think, a top 5 block builder right now. So I think that differentiates us hugely from the other players.
The key here, of course, is how much Bitcoin. If you look at all of these different companies that are going to ETH treasuries, I mean, how much Bitcoin could be coming out and possibly into ETH, especially with this new treasury model? What do you think the size of that market could be?
I think there's probably, anywhere, and this is a broad range, $2 to $10 billion worth of capital that's going to flow into digital asset treasury strategies and public companies. Okay. As you start to get more and more players, they start to become Me Too players, right? For Bitcoin, you've obviously got, Michael Saylor and Strategy that's doing extremely well. You've got MetaPlanet. You had David Bailey come out, but there's a very specific recipe of what works in the public markets for these deals, right? It's typically a high-profile, individual that comes on as the chairman of the board. If it's into a new company, it's a sub $10 million market cap company that's got a kind of failing business model, and then it jumps, and we'll see what happens, right? For example, with SBET, Sharplink, they had a lot of their investors come out of the market when they filed the resale registration statement that basically opened up the pipe shares to be able to be sold. Now it traded close to NAV and it started to climb back up. But I think, in my mind, trading at a huge premium to NAV is a trade. It's not a long-term business. I think overall, maybe you get a 2 times like MicroStrategy. If you're lucky, a 3. But trading at 10 times NAV, I think, is a very hard proposition, because what's going to happen is smart hedge funds will come in and say, well, what else do you have? And they will short your stock and, either, buy E, short your stock, or if they can't, if that's not a good cover, they'll just buy another equity that's at a different NAV premium and squeeze the arbitrage. So overall, I think, if the markets were rational, and they aren't always, digital asset treasury companies should trade at some sort of a premium to NAV based on their operations. But if they differ too much from company to company, I think the market will realize that and try to.
What about a merger?
I mean, it's always a possibility. I think right now, it all depends on valuation, right? I mean, if someone wanted to buy us and we're trading close to NAV, we would want a major premium.